Well, Axel Weber, chairman of UBS, told me last hour the equity run's got a couple of years to run. I said double-digit gains. He didn't go that far. 2 more years?
Difficult call, but I certainly think you see double-digit gains from here. You know, we've got a accommodative monetary policy globally, despite the tightening interest rate backdrop in the United States, which I think is going to be moderate, but you've got accommodative monetary policy everywhere else. Global economy is growing, corporate profits are growing, and valuations, whilst full, are not overly stretched. So we think there's still juice in the equity story.
Where are valuations most stretched? Where do we see asset price distortions right now, Mark? What's top of the board when it comes to overstretched valuations, would you say?
Yeah, I worry about European high yield, which you could almost struggle to call high yield these days, actually, given how yields have fallen. I worry a bit about US equities and, you know, whether we are in a tech bubble or not. Some of the valuations in some of the US tech companies.
You've pulled back a bit from technology stocks on the day Apple releases the iPhone.
Yeah, and Apple per se is not necessarily the most expensive of them, but certainly there's a lot of exuberance in the tech sector.
So you've come back a little bit. I mean, you still favour the asset class, don't you?
Well, yes, we do, but we've been taking money off the table because valuations are beginning to look fuller.
Yeah, you've got some worries. There are risks. Geopolitics, one of them.
Yep.
Central bank leadership. Yellen could leave February. Mr. Kuroda, April. Mario Draghi.
Yeah.
You're suggesting in your notes, you know, could make a run for the Italian leadership. I mean, that would leave a big hole.
It would. I think one has to come back to what are they trying to do, and what they're trying to do is keep a lid on inflation, and inflation doesn't need a lid kept on it because it's difficult to see anywhere. So I think whoever comes in is going to have a relatively accommodative stance because global inflation is difficult to see.
Does it lead to accelerated central bank normalisation? New leadership at the top of the world's biggest central banks.
They're still facing the same problems.
Yeah.
I'm not sure a new set of eyes is going to come in and do anything terribly different. As I said, inflation is difficult to see.
And these are all this is everywhere.
Yeah,
we're talking about
absolutely.
Here.
And you know, the developed world is very indebted. You know, it's not obvious to us that you could aggressively raise interest rates and get away with it.